Hello, investors. This is Ted Zhang, portfolio manager at Revere Asset Management. Today is March 4th, 4:49 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup daily market insight video. Stay in the market. We're currently in a mild correction. Market leaders, down arrow. Short term, index is below 21 EMA, so down arrow. Medium term, down arrow. Indices below the 50-day simple moving average. Long-term trend, small caps, mid caps are in a downtrend. We have a currently neutral or sub arrow pointing to the neutral category as the Nasdaq, the Dow, and the S&P are still above their long-term 200-day simple moving averages, but it's starting to weaken here, and we will definitely talk about the longer-term trend in this video. What happened today? We had a failed bounce attempt, and then we saw further weakness. 21 over 20 list is under construction, so not much to talk about there. We'll get you out the 21 over 21 list once we have constructed it and determined there are some proper leaders. Right now, it's a very mixed bag, and we'll talk about a few names. Big 8 down 0.54%, RG8 down 0.91%, S&P 500 down 1.22%, RSP down 1.62%, Qs down 0.32%, QQEW down 0.38%, Dow Jones down 1.55%, mid caps down 1.56%, small caps down 1.08%, global 60/40 equity bonds down 0.66%, and GROTECTION down 0.67%. And we'll definitely start getting the TurboTection stats up soon once we have figured out a few other logistics. So jumping right into it as always, starting off with the S&P 500 index. Another huge distribution day, down 1.22% on elevated volume. We tried to reclaim the 150 day and failed, closing at the lows end of the range. We are holding so far this horizontal line that extends back, which is the election, which is the left side peak from here, which also coincides with this low right here. So there's just some two key levels right there. The 200-day is right underneath us. What happened was we gapped down, sold off, really had a nice uptrend really into the last hour, and then sold off into the close. Quite a violent one too. RSP was even weaker today on the day, down 1.62% back to the 200-day moving average. Distribution came in. QQQ undercut reclaimed the 200-day moving average. You can see undercut reclaimed it, trended higher, and then sold off into the close. And we closed below the 150-day, and the 200-day is right there. Another huge day of distribution. QQEW, same thing, closed below the 150, still above the 200-day. Same with the Nasdaq and S&P. Huge failed breakout and all the way back to the 200-day. Dow Jones, similar action. Cup with handle that just leaked off, and we closed below the 150-day today on elevated volume. So that's another distribution day. Mid caps continues to live below 200-day. Another lower low below 3,000. Mid caps are just horribly weak. Small caps, same thing. Nothing to really talk about here. The volatility index initially spiked up, hit highs of 26.35, retreated a bit, but this is a slow grind higher on the VIX. It's not one of those violent spikes like this day and this day. This was in the summer, the yen carry trade fears and recession fears, and this was just a December sell-off or pullback. We still haven't gotten that VIX spike yet with huge fear. So potential tradable bottom will come when that VIX spike happens. Dollar completely sells off so far. There's definitely geopolitical and economic and policy uncertainty in the United States, and there's some signs pointing towards an economic slowdown. And when the economy is weak, the currency related to that country is weak as well, especially when there's high uncertainties. Gold bid it up higher, reclaimed the 21 EMA. GDX starting to form a cup with handle. 42.66 is the trigger. Bitcoin, I'll jump over the trading view. We undercut, reclaimed the 200-day moving average. So far rallied, but rejecting that previous 89,000 undercut reclaim low. 150-day, 10-day moving average, and 20-day are still above. So Bitcoin's not out of the woods. Just a lot of volatility here. So nothing too significant. On to bonds. The long end of the curve saw a huge rise today, 8.7 basis points for the 10-year and 30-year. That's probably on the backs of Trump officially announcing 25% tariffs on Mexico and Canada, an additional 10% on China. And Canada said they would place reciprocal tariffs, and Trump said he would double what Canada theoretically would reciprocate with. So this is a trade war that cannot be won by Canada, as nearly, I believe, 80% of their exports go to the US, and we rely on Canada with only 6% imports or 6% exports. So we have the leverage, but we have to see what happens there. Theoretically, tariffs are inflationary, but Scott Bessent and the Trump administration believe they can offset that with his energy policies, economic growth, and cutting the deficit. But there's still a lot of uncertainty there, whether that's just theoretical or if it truly becomes reality. So that's it for the inter-asset correlation. I'm going to go to the tail of the tape now. Markets stay in a mild correction. We're operating in the bear case, sustained break below the 21 exponential moving average. The news today, there's concerns over new tariffs, like I talked about, the Mexican tariffs and Canadian tariffs, as well as weak manufacturing data from yesterday. If we see right here, construction spending came in at minus 0.2% versus the forecast of 0.1%. ISM manufacturing came in at 50.3%. So it still was expansionary, since above 50 is growth and below 50 for this measure is contraction. But it was less than the median forecast of 50.6%. And construction and manufacturing really are often more of an indicator of consumer demand, because that is the supply side of the economy. Um, there's no point in manufacturing more or less if they don't expect consumer demand or less consumer demand. So that's that with economic data causing some weakness as well. Today's keys, S&P versus 100-day, which we didn't even get close. Rejected the 150-day. Qs below the 100-day, below the 150-day, still above the 200-day, but holding on by a thread. Same with S&P, and Russell just well below the 200-day. Day count down 1 day, down 2 days. 8 days below the 8 EMA, 8 days below 21 EMA. Expectations are a negative. S&P ATR is up to 1.11%. Some sectors that are up today: bond yields, China, uranium, ARKG. Bond prices were down, dollar, all 8 S&P sectors, XLF, KRE, oil and gas. And today, initially on that bounce, which I showed, that huge recovery all day, that persistent uptrend, which sold off in the close, we tried to start in Lilly, Starbucks, and some QLD. Obviously, we closed the week. Bottom line is failed bounce attempt and further weakness. So I just want to talk about quickly the Lilly buy. It was definitely a stock showing relative strength. Um, and it's more of a defensive name that's always needed, even if we enter an economic slowdown or recession. So we thought taking a starter there. Starter there would be reasonable, especially when the indexes were bouncing off some key levels. Starbucks closed the week. We tried it there, but it was a starter as well. And then QLD, we gave it a try on undercut reclaim of the 200-day moving average, but we ended up rejecting 500 in the 150-day. Just kept them as starters, still very light exposure, 0.57 beta, 1.4% open heat. And again, like I said, failed bounce attempt and further weakness. And the key levels we're watching for the S&P or Wednesday, this should be Wednesday keys, are the 150-day and 200-day, Qs 100-day, 150-day, and 200-day, and then the small caps 200-day moving average. So you can see after hours, even though we had a weak close, we're actually trading 70 basis points up after hours. However, these gaps are really uncertain. And of course, gap ups within downtrends usually are faded, unless that, of course, changes. Moreover, we would rather see a gap down that closes strong for us to potentially mark a tradable bottom. So with that being said, I'm just going to talk about a few charts of interest. We talked about the Lilly and the Starbucks and QLD buys. I want to talk about stocks. I'm continuing to be bearish the semiconductors ETF. We broke down from this trend line here, and we also broke this horizontal level, and we've closed week today, held the 200 level, gapping up 1.1% after hours, but nothing is significant here really because we are in a stage 4 decline. If we take out this level, it can really get ugly for the semiconductor ETF. Microsoft also in stage 4, really ugly, especially below 385, and this is really officially in a stage 4 decline. Nvidia, same thing. We're in a stage 4 decline. RS line is weakening, 47 relative strength. Nothing good to see in Nvidia. On the flip side, WGS is a name that is holding up really well post earnings. Found support the 21 EMA when the S&P and the Nasdaq are almost back to their 200-day moving averages. So this is definitely a name that can work, especially when the markets find their footing and find some support. So yeah, overall, still weak action. We're still within a downtrend until anything changes. Remember that the point of the follow through day system is that days 1 through 3 is often short covering, or it gives a chance for shorts to cover. And then days 4 and onward is to see if real buyers step up to the plate. And that's characterized by an update of over 1% with volume above the previous day. So with that being said, I'm going to wrap it up for today's video. As always, if you're interested in Revere Asset Management, you can reach out to me at ted@revereasset.com. My Twitter, finally got that back, Ted H. Zhang. Phone is 855-REAL-WEALTH. That is 855-732-5932. And our website's revereasset.com. YouTube, Revere Asset as well. And if you're interested in becoming a client, feel free to reach out and we can review your portfolio and be happy to take care of you. That being said, this is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week.